Dang, our con 2 classes in a row. Look at you. 3? Wow. Oh, did you go to Toasties or something? Wait, no, Sunday was the first one you came to, dude. You're capping. You came last Thursday? What was the class on? Uh, Trading psychology. Oh, dude, Linda, she's the goat, huh? That lady is smart. Yeah, she's awesome. For sure, easier to listen to than Al Brooks, you know? And she's so smart. And that Taylor trading book, she talks about Taylor trading method a lot. Man, that's a good one. The book that Taylor wrote is absolutely horrible, but I mean, he was a genius. And if you read it and kind of like have these ideas that he works on, they're just it's a different way to look at a lot of the similar stuff that we already look at in the market. But he talks about, when you're gonna have buy days, when you're gonna have, sell days, hold days, all of that stuff. And a lot of it, of course, is in relation to, trends or just ranges being formed or things like that. And him just kind of playing off, the three push principle. And so she talks about Taylor trading a lot. She's even joked she was going to rewrite the book. I wish she would. It'd be really, really beneficial. Yeah, it's terrible. You can find some free PDFs of it out there and stuff, probably a hard book to find a printed copy of, but it's unique, I don't personally use it. She's just a note taker, and Taylor was a note taker as well. A lot of those people from her time they just note all the time. And so I'm not like that. Welcome everybody. We'll give it a few more minutes to get started, see if a few more people want to show up. I know it's a holiday week, so attendance could be low. I know the trade floor was quiet today. Um, but we'll give it a few more minutes and see if people want to show. How'd everybody do today? We all have a good day. I missed most of it. I had one walk away from the market trade that worked pretty good for me. Hit a nice call scalp here. Hit another one that we'll talk about later, right around here. Hit that one in voice chat, and then shorted right up here, and got blown out. Didn't make anything there into the end of the day. By the time this candle came, I think I ended up took the stop out. I put it on my list. I don't remember. We were down about 60%, but $19 to $7, and it was just a cheapie end of the day. The SPY calls before it ended up running 250%, so they weren't too bad. I sold it. Let's see. I sold it 59% my runner, so not too bad on these ones out here. We'll talk about these in a little bit. It's a good day for talking trend trading and how you can use trends long time frame, short time frame. Today is a good day to use some examples. Yeah, red day, I think this market's been, it's been ornery to people. The moves have been big after we had a couple of weeks of just some, pre-FOMC. I mean, you can even see when you zoom out on the charts. We had a lot of choppy days, slow grind up, slow grind down days, so now that we're getting these trend days, and we're going to talk about a little bit about it, I think a lot of people are struggling. we got used to trading ranges, and now if you're on the wrong side of it, it's not coming back for you like it tends to in a range. So, but welcome everyone. How we doing? Doing good. Yeah, Hector. Yep, green is green. That's right. Everybody always asks about like goals they should set and stuff like that. And I hate goals for trading, you know. If you got more than you had yesterday, then you won, you know. That your only job is have more than yesterday at the close of today, and you're killing it. Everybody else do. Good days, bad days. I know the group is real quiet today. I imagine there's not a ton of trading going on, holiday week and everything. Nice, good day today. Yep, I was only in voice chat for, I mean, basically like right around here is when I joined voice chat today. And then like I said, traded a little bit back here as well. But missed this whole part of the day, the real fun part of the day. Second, we will get to rolling. I mean, I wouldn't say that, but you know, a chart, you know, they all do. I mean, technically speaking, like if you can trade the chart in front of you, you can probably trade just about anything you want. But, you know, everybody's different. Everybody has different risk tolerances. You know, not everybody's gonna like, you know, there's some names out there that have huge volatility that, you know, maybe somebody who doesn't like to trade big volatility won't trade nearly as well, but they might make as much or more money trading the less volatile names, you know. So there's just, you know, I mean, I think that any trader can kind of sit down and look at a chart and tell you what the chart tells you. You know, at least anybody who's halfway decent at trading, you know, they can sit down and tell you what a chart tells you, but you know, there's a lot going on outside of the charts, especially these days. So, you know, like I couldn't sit down and trade oil right now, but I consider myself at least a halfway decent trader, you know, but I couldn't sit down and trade oil right now. I don't know what's going on in the oil markets. You know, I haven't stayed up to date on any of that stuff. So I think there's a lot of people that are kind of in that similar situation where, you know, maybe they don't know something about the market that is being traded, so they would probably fail, you know, just like I said with my example, with like if I went and tried to trade oil right now, I would I would likely lose money. Well, I can't say that because I will say that I did give a truly truly epic recommendation in one of my classes a long time ago. So, post elections, this is where I said get short on XLE. I unfortunately got short right here. That was a couple days too early, but this is where I said get short on XLE because you know short into next year on those futures or on those oil names is you know that was a no-brainer. This was like the easiest short we've been handed in the market in a long time. In classic me fashion, I entered in like here, went against me for a few days, came back to break even, showed me a nice little flush. I believe I was all out right here. And so, of course, you know, missed the bulk of that move, but still got a nice little swing trade for a couple of weeks. Okay, so welcome everybody. Happy to have you here, Dirty River. Tonight we're talking something that I think is crucial in the markets. Paul Borton SPX on Robinhood. I'll send you the link again. Tonight we're talking something that I think is important in the markets. Not everybody uses them. Most people will, of course, take note of them, but maybe they won't trade around them. It's not something that I'm going to say, you absolutely have to have these on your chart every single day or anything like that. But I'll tell you what I do, and it tends to, help me a lot, and that's trend lines. Some people try to hate on them. They try to say, oh, it's retail trader logic, but in reality, it's not. Trends have worked for a very, very long time, as we have, using trend lines in various forms. They were even using them on some of the, charts that existed before, the candlestick was widely accepted. And so, we're going to talk trends today. We're going to talk long time frame trends. We're going to talk short time frame trends, how to trade around them, and then even for as far as entries, exits, all of that kind of stuff. A few of the statistics around them, of course, and then I kind of mentioned it in my post when leading into the class, that you know I I think that likely the most common question that I get is, how do I hold a trade longer? We especially hear it after, that FOMC day and stuff. And, as I said in a previous class, just ignore FOMC day, pretend it never happened. Otherwise, you're going to dwell on that and chase those kinds of, wins or losses back. Otherwise, a trend and reading candlesticks with a trend, and not, I'm not talking name candlesticks, reading what the candlesticks are actually telling you really is the best way to hold a trade longer. And so that's what we're going to get into at the very end of the class. Second. But for now, we're gonna start with trade and trends, things that I look for, things that I care about. Obviously, we're gonna start with SPY. I wonder if I got to blank one of these. So obviously we're going to start with SPY, and let's see. Is that the one that I was trading on today? Yeah. So I don't want to delete that one. We're going to start with SPY, get a clean chart, and we're going to talk about long time frame trends first, because not only will you frequently see big bounces or big breakdowns at the trends, you can also kind of use them for market sentiment. And while there is, there's trend lines that everybody is paying attention to, the thing that I always like to point out is that there is multiple trend lines like every day, not only short time frame ones, long time frame ones. And so we're going to talk about a couple of trends and ways to think about the market in a big picture. And I think trend lines are one of the really great ways to do it. And so obviously, when we look at this market, no questions asked, it is in an uptrend. So we all know that, when these pullbacks happen, it doesn't matter. We are still in a strong uptrend. And, even if you want to be technical, the most major trend line that we currently have working is something like this. And so, we're miles away from that one, obviously. We've even had little short time frame trends here. Well, when we look at the market like this, we always want to analyze a couple of trends, a couple of the, near term trends. Obviously, we can look at this really big picture trend and say, okay, trend is up. That's what we need to know. Then we can start to focus on some of the shorter time frame stuff. One of the trends that I know a lot of people were watching, myself included, was kind of this one. And this is where I want to show you how I draw trends. I don't want to say that my method is right. I don't want to say the other method is wrong. I just want to explain to you why I draw them and how I draw them. And it works for me. Maybe it doesn't work for you, but how I like to draw them, and you can see here, and we'll remove it. I will always start when I'm drawing a trend. I want to draw it on a candle where typically a reversal is confirmed, or the closest high or closest low to that candle. And then I want to always draw it on the wick. And so why do I draw it on the wick? And for me, this is the trend reversal candle. We've been selling here for a few days, and then obviously we've been all up from there. Well, then I want to look for, and what makes a trend a trend? It is higher lows, higher highs, lower highs, lower lows. That's all that makes a trend. So we can see right here, this was technically a trend because this, after our bounce, was our next higher low. So this was technically a trend. You can see we broke it down and then ultimately bounced. So that is when I started to care about this trend. It's the most major one to me in the recent times. So you can see all I did is I connected, I had my wick here. I connected it to the lower high, or sorry, higher low, the lowest wick on the candle. And that's all you do for a trend line. So as you can see, we broke below it on the big panic on FOMC. Obviously, big buy up, still bidders in the market. They're bidding everything, it seems like. So lots of nice buying going on in the market. And now reclaiming this trend. It was, part of all theses today as far as getting long or short or where we wanted to do it. We had 50 SMAs, we had big resistances, we had this trend line. Once all of those were cleared, we got a nice little ripper, out of the market today. Like I said, I missed most of it. But this was the major trend that I had been watching. And I think that it's a trend that most people should have their eyes on, but you always want to go back and look at some of the more major, other trends that we might have. And so the next major one that I have is the big sell, but not big sell, but pretty dang decent sell that we had in October of, well, really a couple of months of the end of last year, leading into this time of year, nice rally last year. Connecting up to, that selling that we had on the closing of the carry trade, the, Japan rate increase stuff. And so that's all we did here. This was our low. And this is our next higher low, the most dramatic one that there is. So these are really the trends that I am most concerned with. And until we have, and even this one, yes, we had a technical breakdown. Yes, SPY sold $20 plus off of it. Still bullish on the market. Very easy to remain bullish on the market. If we come down to here, still dip buy mode, no questions asked. Even if we break below here, and this is where I wanted to discuss trends, and the idea of actual trends that we, try to form trade plans around, all of that stuff, versus, a perceived trend. Even if we break down this trend right here, I am still bullish and looking to buy dips, because even with the breakdown over here, we're still up massive. The trend is still up, even with, this would end up being right around a 10% pullback, even a little bit less than that. I still remain bullish on the market. Not to say there isn't short opportunities. Obviously, I rarely capitalize on them myself for this exact reason. If you look at these charts, every trend you draw, any pullback we have had has been a dip to buy, going on since, virtually the end of 2022, that final push down to 350. Every single dip has been eaten, and within a couple of months, you have been rewarded for buying that dip. In many cases, within a week or two, you have been rewarded for buying all dips. So that's why, people like me, people like Tilio, we trade with the market. And so that's, what I'm trying to teach people here is I don't want to fight the market. I'm not, I don't want to be the hero that tries to short the top. I don't want to top tick the market with shorts, and I don't want to bottom tick the market with longs. A nice rule of thumb is, I don't want to be the first one in the trade, and I don't want to be the last one out of the trade. That's all I care about. I want some form of confirmation, and trends for me are the greatest form of confirmation. They frequently hold. And when you get a breakdown, and we're going to see this a little better, displayed in shorter time frame stuff, but when you get a breakdown, you are one, that you have the statistic that most breakdowns fail their first attempt, and they very, very frequently, statistically speaking, give a retest. So if you are buying the pullback, you can buying at a trend, you will almost always find yourself in the situation where you're presented a halfway decent stop out. Just to look at one right here, maybe, and as I said, there's always many trends in the market. Maybe you were trading, I mean, even, really, maybe you were trading this trend and you buy it. Well, you make a little bit, and then ultimately, this is one where you get the gap down. So you stop out, you had the market go, if you're buying this trend here, you should have been careful, of course, because of statistics. If you're buying this trend here, here's one where you get a little bit blown out. So this is where statistics come into play. We know most breakdowns fail. And so we have to look at this one and say, okay, we bounced, here's our first trend or test of the trend, second test of the trend, not a third, but close enough. Fourth, this is our breakdown. So if you shorted this first breakdown, we see that it failed. If you try to long this because it holds the trend, understandably enough, then you ultimately get, you do get gap down on. But you have the market go $2 or $3 against you. And as you can see, you wait a few days and you're good. But you have the market go $2 or $3 against you. Pretty dang reasonable in the market that we have with, how SPY moves these days. And so that's what I always try to do is look at the trends, trade around the trends, and analyze my risk. If I get blown out, how bad is it going to be? I could have even just looked left and kind of said, well, we'll probably, at least hit around here if it does go down. So your risk, even right here, you knew your risk in this trade getting long. And a trend makes it so easy and so cut and dry to say, I am wrong. And that's something that, anybody who's been in voice chats with me recently, that's something that I try to push really heavily. You guys have all seen me stop out of trades very, very quickly. Of course, end of day stuff's a little bit different when they're, $15 or whatever. But I stop out of trades quickly. I admit I'm wrong quickly. And trends will very frequently be part of that decision to stop out, is a trend is breaking somewhere. And so this is what I do on the daily all the time. And then when a trend is broken, I tend to quit caring about it. If it's just a little short one, it's removed from the chart. This one, trend broke, we're back over it. It stays on the chart. This one stays on the chart because it is major no matter what. So I always leave those up. Then, of course, you can always draw trends on the upside as well. And I'm going to do sort of the same thing where I'm going to look for a major high and then I'm going to attach to the next major high or to the next major high or to the next major high. You're seeing the issue with, top trends and people playing top trend rejections. We're in a bull market. So that is what a trend will always do in a trending up market. As you get more and more, you just keep pointing up. That's why this is kind of the example of why I hate rising wedge, falling wedge patterns, because, if you're in a bull market and you're calling this a rising wedge, well, you have now watched it blow you out $60 of upside as your rising wedge is forming, as opposed to just looking to buy the dips because the trend is up. So when I am in a bull market, I am always more focused on the downside trend. If we go back to 2022, bear market, I become much more interested in the bearish trend. Here was our first one. Great shorts, great shorts. If you did try to short it, you got blown out. No big deal. Well, then as soon as this one is broken out of, I'm less concerned with it now because now we have our new trend, which ultimately ended up being the trend for the rest of the year. And I'm sure I could draw this a little bit more accurate, but you can see here, we're in a downtrending market where we should be more concerned with shorting bounces than catching rips, And so ultimately this ended up being our downtrend that when we were finally able to break above it, get the break above, get the retest on it. That was the weekly trend. And you could have drawn this on the weekly or the daily, doesn't matter. That was the weekly trend reversal that led to this massive bull market. You obviously aren't going to get, we aren't just saying the trend broke and all of a sudden we're in a bull market. A lot of things started going better, obviously, but we use these trends to tell us what way do we think the market is going to go. And when the trend is down, even with these big old bounces, we are still looking to short bounces when the trend is down. When the trend is up, as we know, very, very strong up, we're looking to buy dips because the dip buyers are going to be more rewarded than the short rippers. Okay, so that is your longer time frame analysis. Again, I said you can do it on the daily, you can do it on the weekly. Obviously, the main point that I want to make about this is when we're pulling back to trend lines, don't be the person trying to short them to break. Don't be the person shorting this thinking the breakdown is coming. Will it work sometimes? Yeah. But will you get blown out a lot of the time because the trends statistically are going to bounce? Yes, much more likely than you catch the breakdown, especially in a bull market. And then same as a bear market. We're pushing up to trends. you want to be short at those trends. You don't want to be long looking for the breakout. So that's the long time frame stuff. Again, it's relatively cut and dry. Like I said, I'm looking for higher lows, higher highs, or lower highs, lower lows to draw those trends off. I personally like to draw them off the wicks. I guess I should explain that. So my thesis of why I draw them wick to wick like that, is because you can draw them off the bodies. Frequently, I'm a little more concerned with where opens and closes of candles. I'm more concerned with that in the support and resistance mindset, much less so in the trend mindset, because at trends, we're looking for volatility, either break up or break down, or bounce or breakdown. We don't care which we're provided. We just want that type of movement at those trends. So the reason that I draw them off wicks is because we know it is where one side gave up. It's the same reason when I draw support and resistance, I draw them on the wicks. I might take note of a previous day open or close based on the candle, but I draw them on the wicks. And so we know it is where one side ultimately gave up the fight. So this candle right here is a very, very great example of it. Market had reversed. Obviously, pretty big sell, and we went 563 all the way down here to 540. So $23 sell, and looks like about a week. So nice sell. Well, then this candle right here, and I don't do the hammer candle, like shooting star. I don't do any of the named candle stuff. That I think the guy who made that up would hate how people use them these days. I just care, what does this candle tell me? And when I look at this candle, I know that at one point this thing was super bearish. I mean, it was a solid red candle looking horrible. I don't know how it opened, off the open or close. Well, down here, this, just happened to be a double bottom. The buyers showed up, and the buyers never stopped. So this went from a really, really bearish candle at some point in the day to a $15 rip upside that turned it into, in my opinion, a very bullish candle. A bullish candle enough that I would have said the day this closed, I'm the dip buyer into the next day. First dip we see on the day, I'm buying it after a candle like this, no questions asked, because there's strength here. So that's what I look for. And that's what this wick tells us, is one side lost right here. So we want to know where one side might give up again. Obviously, we took this, grind up trend for a little while, ultimately pulled back, and then, big old election day ripper. That's what we got. So this marked the bottom. So at that point, we put our trend on. I didn't necessarily think it was going to come into play in one day. Nobody did really. But again, we're back above it. So now we get to trade our trends. Well, we know all of this, but you won't, you can see here, like when we drew this trend, this trend was for me official on November 6th. We're now, a month and a half later before we even got a test of it. So it doesn't, these long time frame trends, you really need to pay attention to them when we're trading around them. When we aren't trading around them, you kind of don't worry about them. It's only when we come back to them that it becomes, that's when we start to think about these trends. Maybe we short some of these bounces up to it early, that kind of thing. Well, now we go to intraday. And this is where, for me, we're going to just talk about a few of the different trends that I like to look at, how I like to trade them. As always, anytime we do these lectures, I always like to give the disclaimer that, we are hindsight trading when we do lectures. We get to look at a chart, we get to pretend like everything is great and we would have done exactly this during the day. And, maybe we would, maybe we wouldn't. But it is important to be able to look at a chart and say, okay, if I was on it, this is how I would have played it. And so that's what we're going to do. We're going to talk about today. We're not going to talk about Friday. We are going to talk about Friday in a little bit. We are going to talk about Friday. We will probably talk a little bit about Thursday last week, and then we aren't going to talk about Wednesday, obviously, because just wild fluke of a day on both of those days. So we're going to talk about today. And some of the things, got it, you're the worst, Archon. Some of the things that I like to think about with trends, and some of the, common ideas that people will hear me talk about, and how do I draw them? How do I chart them? And we just so happen to have a few of them show up in the market today. The first thing that I want to point out with trends, though, intraday, they are very uncommon. You will I believe this statistic is right around 40% of days in the market or less are trend days. The market spends most of its life ranging. That's why I think it is much more important to learn how to trade ranges than it is to try to trade trends or be hunting breakouts all the time. Ranges are what they should be, the bread and butter. They show up in the market all the time, multiple days a week will generally range. Obviously, we've had some great volatility in trends recently, but most of the time, the market is going to range. But what are some things that I like to do, trends that I like to look at every single day to maybe, give me a hint that a trend might be forming? And so some of the first things that I do any day I come into the market, I always look at the after hours movement. And I posted this chart in Pro. I don't remember if I posted it in Premium. I always like to look at the after hours movement. And again, look at any trends that we have been forming in that after hours. Obviously, there's little to no volume in here, like this big old candle right here. I tend to ignore these kinds of candles and not really use them, because yes, it's a big candle. Yes, it's like $1 or whatever on SPY, or, just short of $1. It happened on 12,000 volume, and it was 4 a.m. So it was really just as New York was starting to think about trading. Those markets start opening 4:30 over there. So this was New York starting to think about trading. I don't really care about that. What I do is as I do with all trends, I look for the candle where the trend reversed. You can see we were trending up. This is really our first confirmation that trend has reversed. So next thing I do is I look for the next major lower high. It so happens to be this one right here. So again, I said it with wicks. This is what I do. I always draw it from the wick. Obviously, there was no wick on this candle, so this one's coming off the body. I set it on the wick right here. No questions asked. That's how I do it. So now we know the trend is down into market open. So maybe we don't want to be the first ones in line to do any buying. Maybe we want to wait for a breakout. Well, we can see, and I'll come back to this one. Let's see. So these were our levels from class last night. So just to put those on there, we're going to have those pulled up. Let's see. Oh yeah, we're going to have these ones pulled up. And then because, we've done the support and resistance class, so it's important to get these levels involved with your trends. That is where trends really shine, is using them as additional confirmation. So again, same thing. This is our reversal candle right here. We look for our lower high right here. And that's how we draw our trend. So we know the trend is down into open. We know we're pushing up into our levels where we don't have interest in really being long unless it is on a dip buy or the breaks above these levels. So these are the levels that we care about, or I care about intraday. Now, the next thing I look for, and this is something, I give this statistic all the time, that 80% of breakouts fail. Which is, the truth. 4 out of 5 times you aren't going to get the breakout. That's just how it works. That can also be 3 out of 4. It can be, the percent doesn't have to be exact. You just know that most breakouts are going to fail. However, for me, and people have heard me say it, trading EMAs, I've discussed it in the EMA and SMA lectures. I might buy the first pullback to an EMA. That one I'll feel okay about. Second pullback to an EMA, not gonna love it. Third pullback to an EMA, I start to get a little bit worried, and there's no way that I'm taking, the counter trade right there. So people have heard me talk about it, and I've been asked it a bunch in classes. I discuss a thing called a 3-push wedge. And this morning we had one that's set up really nice. I know I talked about it in Pro. I'm not sure if I talked about it in Premium. We got the nice rejection right where we wanted it. Well, now on this downside, we also have, to me, this is where trend reversed. So I want to take note of this. Obviously, we had the slow grind down, we had the sell, then we finally get the bounce. I want to take note of right here where we bounced. Maybe I don't care about it as a support and resistance line, but I want to be note, take note. And it's right around 590, makes sense. Then I'm going to connect it to the next wick. And that's this wick right here. And now this is what, this is when I'm talking about a 3-push wedge for anybody who's ever asked me about these. This is what I'm talking about. This is your first leg down to it. Here's your second leg down. Here's your third leg or third push down. I want to start to see volume looking exhausted, sellers way outpacing buyers sort of thing, all the way down to zero, even zero buyers. And I want to see the break and I want to see the reclaim. And this is a pattern that I trade all the time. You call it a 3-push wedge. It's not necessarily a wedge. It's just a third test of a trend line, attempted break and a failure to break down. So now this trend is our entry. And this was a trend that I even recommended. I know people took this trade long here. This is what I was looking at. Obviously our next closest support is down here. So that's what I said. As long as we are above this trend, we're buying dips. Otherwise, we short it down to the 586. I'm not going to chase a move like this. I'm sure people tried to, but it's just not enough for me to get short. I look for the reclaim and I look to get long. So that's what I did. And this is just using, more than anything else, this was the trend. I'm sure, honestly, if I pull up my actual studies, yeah, you can see even here, we're below all EMAs, we're below VWAP, we're below hourly 20, no, this looks like it's more than it is. It's just a few EMAs and VWAP. So that's all we look for. We look for this trend here and the bounce to VWAP. That is the main trade that we are looking for. I take trades like that all the time, and they work very well. Well, now, what's another trade we can look for? We know where our bullish spot is up here. Obviously, you could have tried to short this double top. If you did, you stopped out at exactly zero pain. If you followed your rules, you stopped out here. So now we are above our levels. We probably don't want to chase it. You could buy this one. You buy the first pullback. We know we've broken trend. Our short-term trend is down. We know we've broken trend and, we've kind of pulled back. So we buy the pullback to our level. Well, now the next thing that we watch, we can remove that trend. We've broken it. We're above it. If it comes back into play, great. Otherwise, here's our next trend. Here's our low. Here's our very first higher low. So this is what I always try to teach people on your intraday stuff. There is many trends being formed all day long. Sometimes they only last 5 candles, 10 candles. Sometimes they last 40 candles, however many it might be. A trend has no set distance it will go. It has none of that. We don't want to make predictions based on them. We just want to say, the market is pointed this way. That is what the trend is telling us. So again, we get our nice trend up here. And obviously, this pullback would have worked you were close enough. Your stop would have been under the trend, under 591, but you didn't even have to worry about it really. So we get our trend and we can see, first leg, second leg, pull back and give us a bounce. Then we start to chop and we get the breakdown. This isn't super common, but we get the breakdown. And this is one like I discussed. If you do buy this pullback into the trend, and you always want to be careful because, did these touch the trend exactly? No. But they're pretty dang close to being tests of that trend breaking down, Then you kind of have a reversal candle here. This is, as I discussed, high wick on the top, small body closing near the lows. Not the most bullish candle I've ever seen, but maybe you buy this dip right here, you stop out on this candle. Or if you don't, when this one bounces, you stop out on this candle at basically no loss to you. Well, you can short it, but I don't short it. We know the trend is broken. I am much more concerned with buying at the resistance or the support and then looking for a bounce to resistance. Well, again, we now have a new trend forming in the market. This is, obviously very tight channel down here. So you could be shorting this trend on the way down. I don't like to do that really. I like to see us start to consolidate on resistance and look to buy here with the stops below these lows, giving us the trend here. The second the trend breaks, now we know, okay, we are at least attempting a breakout. We had, 1 test, 2 tests, 3 tests, 4 tests, 5 tests, 6 tests. There's a chance this breakout is coming. So we can buy the breakout. or we can buy these first pullbacks here, which this is the one that we ended up hitting in voice chat today. We entered here on one of these candles. It might have even been this one. The first red pullback that we saw close to an EMA, we bought this one and we're able to catch this nice bounce. And it all came from the trend break with the test on a level. So people always ask me, what is your favorite setup, in the market or whatever. And it's likely double tops or double bottoms around opening range or hourly 20 or something like that. Second best is big trend day, strong pullback to a very big level with a trend break. This one works over and over again. I'm sure people want to call this a bull flag or whatever it is, but if you were playing this as a bull flag, you had to deal with a whole lot of heat on the way down, which I don't like to, I don't do that. That's why we let the pullback happen and then buy it. So that's what I focus on every single day. And so I just wanted to go back and show you, not every day is big blistering trend days like this. More often than not, we get, and you can see, there was my pre-market trend from the other morning. I was concerned with this, and then obviously the break above gave us a nice move up. But more often than not, we get range days. And so this is the type of trading where many trends are formed on the day. You might have, maybe that's your first trend. Well, they break it. So that's your new higher low. Here's your next higher low. There might be many trends formed in the day. And I always I'm showing this as an example, and I was happy we had this day recently. I'm showing this as the example because you don't want to do this. You don't want your charts to look like this. A rule that I tell people is you never adjust a trend because you will frequently be adjusting the trend to make you hold the trade longer. And so, just to show that example, maybe you're short here, and so, or maybe you get short around here and this is your first trend, so you get short around here, maybe on this bounce up. Well, you get blown out and you don't stop out. Well, it comes back to, maybe your break even, but maybe you said, okay, well, that's the new trend, so I'm going to hold below that trend. Well, then you get bounced against again. And if you're getting caught in bounces like this, your contracts are losing so much value that you're probably hardly green at this point. Well, you get another bounce and you're like, oh no, do I stop out? Do I stop out? Do I stop out? And so you bump your trend again. You never want to do that. Because you'll start adjusting those trends, and all of a sudden your trend is going to wind up being basically flat because that's what a trend will always do. The market goes from trending to forming a range. That's how the market works. And so you'll keep adjusting those those trends over and over again until you're staring down a really big loss. And so what I always tell people to do is you draw your first trend, okay? It breaks and it fails the breakdown. Well, now we're just looking for range activity. For me at this point, this was big buying, met with big selling, met with big buying. We're an hour into the day at this point. I'm looking for a range day, no questions asked. When I finally get this big bounce right here, that is where I'm likely going to say, okay, this trend's done for. It didn't do anything, Now here's my trend. Now I have a trend that I care about. This one has more weight to it. You can see we sell down. Maybe you're buying these down here. I would be, double bottoms, triple bottoms, opening range, looking for the bounce to the trend. If you get the trend break, you look for the bounce to the previous high, where your trend was before and it rejected. That's your trim spot. You aren't, we're looking for ranged activity, even though we're using trends to tell us where we think things will happen. Then again, we fail back down. Maybe you try to buy the break and retest on it and lose some money. No big deal. Your stop is again right under the trend. Keep it super simple. You get a failed breakdown back into it. You finally get one closed into it. Maybe you stop on this candle. If you see this selling here, you got to stop here on these lows. No big deal. And then maybe you short a bounce to the trend. So this is what I do every single day. And then again, sure, you can adjust this trend even higher if you want. as we can see, and we wouldn't know, that it wouldn't do anything. But as you can see, it ultimately does nothing into end of day. We take a slow grind down, nice sell once we break back below it. I think I was actually making calls right here. I kind of remember getting blown out on this day. I think we did catch these ones though, maybe. But I kind of remember getting blown out there. But again, this is what I do every single day in the market. I look for the trends. I look for pullbacks to supports. I look for pushes up to resistance. I figure out where we are in relation to the trend, and I take the trade around it. The nice things about trends is they tend to be pretty cut and dry. You got to ignore the FOMC day. They tend to be pretty cut and dry. And if you just zoom back through some charts, you will see that, not only on range days, but on trend days, they help you. It doesn't matter the conditions of the market because, as I said, there's always some sort of trend forming. You could have had your trend here. When it breaks, you stop out of your shorts. Then maybe then you see this bounce, you see us pull back and set a higher low. Maybe you're in dip buyer mode on this. Maybe you buy these dips to this trend. If you buy this one, you stop out. And you just let the market tell you what to do. Then this one, ultimately, you get the bounce back up. You get to say to yourself, okay, we had a couple candles set some, lower high right here. I'm going to short one of these next bounces up to this trend. It's also like triple top resistance, pretty easy one to short here. And then your stops are very defined. Tight stop is going to be a close back over that trend. Looser or emergency stop out is going to be setting new highs. So you just trade that trend. And then again, maybe you say, well, look, maybe this is another trend. So you short back up into these ones. Many trends always working in the market, but remember, the more candles that they encompass, the more important they are. And trade with the trend. That's what everybody makes the joke, the trend is your friend, but I see people just fighting the trend like it is their worst enemy all day, every single day. And so, we have ranged movement. Regardless of trends, you're looking to buy dips and you're looking to short rips. That's it. That's always how you do it. And so, oh yeah, Rudy, I do. That's what I was saying early. Use those use that pre-market stuff. You can obviously even catch, here's one. And again, oh, well, this was the day we were just trading, and I'm willing to bet that this is actually going to show us something. So high a day, here's your high, high a day with the rejection. Here's your touches in that pre-market. That's, that's the next lower high. And here we are rejecting it multiple times that day. Is it always going to be that clean? No. Are you always going to pick up on it? Not necessarily. But, like I said, trends can be one candle or trends can be 8 hours. Just always take note of any of the major trends that you have going on. And that's how I trade every single day, and people frequently say, why'd you buy calls there? Why'd you buy puts there? If it's in a place where, the market is pushing up, and I'm shorting it, or the market is really selling and I'm buying it, it's likely because I see some sort of, trend or something like that. Or I see, here's another one, nice 3 push wedge. Got to think we traded this one. Nice 3 push wedge right here. The breakdown that doesn't hold, the break back above with the retest. I love that trade. Like I love this trade. Your stop is really tight. It can work on, let's see. I wonder if I can just spot one real quick if we had a nice reversal. Oh yeah. So this is one a little less major and maybe a bit of a reach. Yeah, that's too much of a reach. I got to give a good example. Because the wedge, you aren't necessarily looking for the reversal, but it can give you a very nice entry if the reversal comes. And choppy, a lot of chop lately. Not a lot of 3 push wedges breakdown in such a strong bull market. That's a pretty nice one right here. Takes up the whole day. Obviously, you could look on it in a 15-minute, probably looks even, oops, we're gonna lose it. 15-minute probably makes it a little bit cleaner, but always look for them. What's the best time frame for day trading? It's 100% up to you. All of my levels, all of these blue lines, all daily levels. I trade them on the 5-minute, the 15-minute, the hourly, the 4-hour, doesn't matter to me. Trends, I like to draw, generally speaking, on the 5-minute. Only because I have maximum amount of data, I can identify where those wicks are a little bit better. But trade them on the 15-minute and you're going to be equally as happy. I mean, this is a really nice one. Breakdown came, 15-minute had buyers show up. We closed above the trend. This is an easy long right here. And then I even said, I mean, my comment in pro, somewhere right around this time, let's see, at 7:23 a.m. Yeah, so yeah, this blue circle at 7:23 a.m. I said nice little 3-push bounce. Even gave us the exhaustion wick under, and then I said there's no reason to be short until this trend breaks. So if you're swing trading and you're using the trend, longer time frames, you do not, if you're a swing trader, you don't care about a 3-push wedge on the 5-minute intraday. When you're a swing trader, you shouldn't really ever be even looking at the, the 5-minute chart. You should be looking at long time frame charts, long time frame trends, this kind of thing. I'm drawing just a random trend. You're a dip buyer as a swing trader. You aren't a ripper buyer. You're a dip buyer when you're a swing trader. There's nothing more I hate than people, like it was on Friday, people swinging calls Friday. Like what? Like, like the S&P was up $15. Like, what makes you think that like swinging here is a good idea? Do we have a trend break and stuff? I mean, sure, but you were just buying calls of resistance. As swing traders, we buy dips, and so that's always what I recommend. Look at your hourly charts, look at your 4-hour charts. If you have some nice trends forming, you're being presented nice dips, you better be a buyer here. You got a trend $1 below you. That's where you want to be the buyer. Sometimes, sure, you get rewarded buying this and you get a gap up. More often than not, you buy this and you get the sell down, where if you would have bought the dip, you made more money. Again, here, dips down, you're a dip buyer here looking for that move up. Dip buyers, dip buyers, dip buyers, not rip buyers. Rip buyers frequently get destroyed and have to pray for the market to come. People swing exactly. I see that somebody even said swing is Spy Friday. Like, I mean, why after as a bullish person, like this is a beautiful day in the market. That is just glorious move from those lows. I mean, who knows the next time we're gonna see a $18 up move off lows in the pre-market on SPY, beautiful day. What more do you need? Like if you're swinging calls on this, beyond the fact you're buying calls at resistance and big levels, you are just being greedy, However, we come into today, obviously you remain bullish after a strong day like that, and you look to buy dips here, Okay, so that's trends. Does everybody see what we're saying here? Any questions? The very last thing I'm going to do is now we're going to get into holding trades longer. Times that it makes sense and times that it doesn't make sense. And a method that I like to use, obviously I'm not going to use these as much on same days, but if you have time, it becomes very easy to manage that trade effectively. So if no questions, we'll get into holding trades longer. And it takes no time really to discuss it. Okay, nice. No questions. So, and we are going to use just the epic trend days because, we'll just use today because we had enough reasons to be looking into these trades. Okay. So, as we discussed earlier, we had our trends here. I deleted it because, we were talking about the day. So we had our trends here. Maybe you don't get this entry. Because as I said, hindsight trading, we don't want to pretend like we're like perfect and going to just hammer this, no questions. But maybe you buy this pullback. It's close enough to the trend. You're willing to put that dollar at risk on the trade, and obviously on same days you're scorched if it goes down there, but maybe you're trading tomorrow's. So you're looking to catch an upside move. So you get a nice breakout candle. Every candle in the day is either a range candle or a breakout candle. Maybe maybe it lasts one candle, maybe you range all day, who knows? But you get your nice breakout candle. So obviously at this point, you want to have those stops up in profit. You're up nice after a move like this. Well, people don't know when to move their stops or how to trail these trades. And so I'm going to show you the method that I like to use based on using the candles. And you'll see where we get stopped out and how, how that all works. And, it even discusses trimming trades. This is how I treat, scalps. If I'm looking for a scalp, I'm all out after this move up to resistance, but if I'm in it looking for a day trade, I am looking for a reversal, maybe I'm looking for, a lot of people like to trade a measured move. So, we pulled down, $2, whatever it is, $2. Well, if we get the breakout, a lot of people will like to look for a give or take $2 move up. It's called a measured move. It's a very common way of trading. It works pretty well too. But so you want to trail the trade and, get as much profit as possible, but not risk very much. So you get your breakout candle. My rule of thumb is if I trim, which for me, I'm trimming, we got resistance here, 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 here. No reason to not trim. If I'm happy enough to trim, my stop moves. So now my stop, we're just going to say we entered here. It moves up into here, into profit. Well, now I let the market work and start pushing up a little bit. And what I do is I look for another breakout candle. And because, if we're looking for a breakout in the market, we want candles that show, strength on the side of where we are trading. And so when I see those breakout candles, I trim and I move my stop again. And where do I move my stop to is always the questions that I get. And so, this candle right here, pretty obvious breakout candle. This candle right here, it's a nice candle, but maybe you don't think of it as a breakout candle. I do, because strong bullish candle after a couple candles of consolidation, closing near its highs. So when I see a candle like that, I move my stop up to the low of it, because on same days it's tricky because your stop is going to be moving around, due to the volatility in them. So maybe you bump it down a little bit lower just to give it some breathing room, but you move it to where the breakout came from. Because we know if we pull back into there, chances are that breakout is not going to hold. So we have, breakout, setting new highs, breaking above our resistance. We move our stop to here. Well, now we don't touch it until we see we either one, get stopped out, or two, we see another nice breakout candle. So you can see here, no breakout candles until this one. Now we trim or we move our stop to here. Obviously, because we hit big resistance here, you want to, be trimming pretty heavily. But we close above it and then we push, and we get a breakout candle right here. So now again, we move our stops to, and you could really pick any one of these candles right here. I pick this one because this pushed up, sold, pushed up, and then this is the one that closed above it. So now here's our stop out, all based on the chart. This isn't, the market does things like this every day. Maybe you get to catch a trend for an hour. Maybe you try to short this side, maybe you short this. And you get the breakdown candle. Well, your stop right here may or may not be tagged by this. Again, you get more breakdown candles. You're probably moving your stop to here. So this one is going to tag you out. However, if the days where people want to hold trades are typically strong trending days. So again, we get the push up, the push up, the push up when we're getting breakout candles. All of a sudden, we have a reversal candle, then an ugly candle, and then another ugly candle. So we're going to get stopped out here. And now we can look for a reentry, doesn't matter. And then again, maybe we take this one, we held the level. Now we buy the first pullback to here. We're pushing, pushing, pushing. Here's kind of, we get a nice move up, obviously trimming resistance. Here's our breakout candle, closing at a new high. Stop goes to here, pullback comes down, breakout candle, stop goes to here. Obviously, we get stopped out and the market ends up pushing what, 10 cents, 15 cents more. We don't care about that. Use the chart. Don't use your feelings. Don't use any of that. Use the chart to tell you to stay in the trade. That's the best thing you can do. Obviously, on big breakout days, maybe you get these breakout candles, then you get consolidation, then you get this, keeps pushing up. Here's your next big breakout candle. Really no reason to even move it until there. The market's very, very rarely going to move like this. So, sometimes it works great. Other times you'll get stopped out quickly, but that is how I do it every day. And those are my levels. Those are, and I'll have opening range, I'll have EMAs, I'll have all these other reasons to trim, you should always be trimming on the move up, but uh let the chart tell you what to do. The only thing in the market that, is the 100% truth is the chart. Those things do not lie. So follow the chart. Don't follow your feelings, don't follow someone else's opinion, just do what the chart tells you to do. So with that, that's all I got tonight. We got any questions in here? Oh, we got Norberto. I'm sure he's gonna ask me to chart something here. So really great question. About how do you know that it's going to be a strong trend day? And really, so this is gonna sound really dumb when I say this, but the strongest, and again, it sounds dumb. The strongest trends will come after a breakout. And I know that's like, well, yeah, no shit. If it breaks out, it's going to trend. But that's what you need to consider. And that's where you need to look for those strong trends. So on a day like today, I was lucky enough, I actually did hit this trade right here. And then I set my sell right here because I viewed it as a double top. Well, you know, if you were a dip buyer here, there was some risk involved. We were seeing signs of reversal. Like I said, I had a pattern that I like to look for that shows me what to do. The safest entry of the whole day is right around here, where we fail to break down. We've now broken out. We've now retested the breakout. Right around here is really the safest long of the day. Do you miss some of this trend and miss the early trend? Yes, but you can see if you have reasons to enter early, you can front run the trend, and then that's how you're going to catch the really big, strong trending days. Is looking for some of these things to front run it. But the issue is it's not always going to be this simple. You aren't always going to get a three push wedge. You aren't always going to get nice reversal candles with a, potential reversal that is also a higher low and your first higher low of the day. You aren't always going to have all of these reasons to front run it. So really you wait for the breakout to come, and then you buy the pullback and you trade the pullback. That is always going to be how you get in the strong trends. Again, this is a stupid day. We can't really think about it. But again, here's our little consolidation early. Here is our breakout. We now have broken out. We've held the consolidation. So that's what I mean when I say the strongest trends will come after a breakout. So always look for, some sort of consolidation break. It's like me and Flips tell people all the time. Everybody hates ranges. Ranges are, big breakouts don't come without ranges. Big breakdowns don't come without ranges. You need ranged movement. So when I say you need a breakout for a strong trend, that's what I mean by it. And you can see it not only short time frames, but long time frames. A really great example is Apple. You know, Apple did nothing for months and months and months. And then finally, one day off of these lows, decides to rally $40 or whatever and add $1 trillion in market cap. You need these consolidations to get moves like this. So you see it in short time frames and long time frames. Even again, Apple way back here, it spent a lot of time in this $20 range before, putting up a 50% year or whatever. Daily levels, always daily levels. You can even see them right here. These are what we charted. These are what we did on the Sunday scan, these are what we charted. And so what I told everybody was you be a dip buyer in this zone every chance you get. And God, it worked just repeatedly, repeatedly. And you had 30 cents of risk on the trade if you were buying all of these. You got to hold through 30 cents of risk. If you aren't setting new lows, you're a dip buyer here and here and here. Always daily levels. They just work over and over and over again. I mean, it was same as SPY, these are the levels that we charted in our class last night. And this was, I think, yeah, these were the levels we charted in our class last night. Unfortunately, I removed, some of them, but we had the 50 SMA like right here. We had that trend like right here. There was a million reasons to buy this right here and know that this was going to give a nice breakout, and to remain a dip buyer above there. So always the daily levels. QQQ for tomorrow. Well, Norvin, I hate to burst your bubble, but the Santa rally, the actual Santa rally comes after Christmas. Little known fact. Um, oh man, I wonder which one of these I did this on. Maybe this one? Yeah, these were probably, yep, these look like our levels from yesterday. So again, QQQ, it was the same thing. We knew 520, this 519.29 was last night. That's what I said was our line in the sand. You can short below it looking for this 515, but if we are holding above the 520, 519.30, to 520 area, that's where you want to look to be a dip buyer. Fortunately, I had the scary double top, but you got the double top breakout and then pull back and hold it. Bunch of reasons to be long there. But with QQQ, I always have to look at the daily time frame. This 524 is tricky, we would need a nice break above here to really get pushing more. It'll be another day of I won't be rushing into longs at open. Just like this morning, I was one happy I didn't swing long, and two was not rushing into longs at open. Amazon, this is what we charted yesterday. And again, all off the daily time frame. And our discussion was this whole zone, 225.70 all the way up to 227, strong little resistance here. Not a lot of interest long up here. Much more interest long if we can pull it back down to, 222.30 up to 223.30, somewhere in that zone. That's where I like the dip buy on this. But I was definitely leaning, the more we pushed up, I was definitely leaning a bit more pullback biased on Amazon this morning. So, but it was a nice move up. Obviously, it looks like I'm sure people could have caught something off of here. We even had a nice pre-market trend break for you to catch a little something. But for me, I still would have felt much more confident short here than long. I wouldn't be short, but it's not where I would be getting long. Okay. Well, that is going to do it. We will call it. Thank you everybody for being here. Nice little turnout. I wasn't sure how we do on holiday week. But thanks everybody. I appreciate it. I'll be trading Pro VC tomorrow morning, and then I'll be pretty well checked out until, I don't know, Thursday, something like that. So if I don't talk to you and you celebrate, enjoy the holiday, and we'll talk to y'all tomorrow. Thank you so much. Yep, right on, everybody. Thank you, and we will talk to you soon.